What's going on, guys? It's Matthew Trades FX back with another video. Before we get into the video, I want to thank you guys for all the support on my last videos. Make sure you guys like, subscribe, hit the post notification so you never miss a video. And if you know me, we get straight into these videos, so let's go. Today I wanted to come to you guys and break down how the algorithm trades throughout the daily range, and basically how we should be looking for entries above the opening price if we're trying to go short, and below the opening price if we're trying to go long. So we're gonna start off today with the dollar index, and we're gonna also show how intermarket analysis, using the dollar to help you with analysis with all the other currencies that you trade. As I said, I'm only trading the euro dollar right now, so they're a mirror of each other, so I can get lots of insight from the dollar index. So today it's Tuesday, one of the best days to be trading. As you can see, we have a nice big down day today on the dollar. But what made me have a bearish bias on dollar today? Let's go over that. If you look back at the structure, you have this old low back here. We took that out. So I can say that, hey, we took out old low. We're going lower. We're bearish. Now going to the levels, I can see these two last up close candles back here. It's that bearish order block. So let me just draw that. So as you can see, bearish order block. Price hit it on Thursday, and then made a swing high on Friday, if you guys could see that. And then Monday, we just took out this. We punched above this little swing high back here. So going above swing highs, that's gonna be your buy side liquidity. So when buy side liquidity gets taken, as I said in my previous videos, not all the time, but we can expect a reversal, a turtle soup type scenario. So when Monday punched above that old high yesterday, I was like, okay, when we close, Tuesday can punch up a little bit, but probably give up the ghost and go lower and aim for this old low down here, right? So then that is sell side liquidity, and then that's a potential target. So now going down to a 4-hour chart, you get more detail. We have these relatively equal highs, this buy side liquidity. We punched through it higher here. And then we have our sell side liquidity down here, these two lows. So as you can see, the price action just been going lower. Go to hourly chart, you get way more detail, and this is where we started to frame everything. So as you can see, we punch higher, we come lower, we break the swing low. So from a macro perspective on the H1 chart, all lows being taken, we're bearish. Once we took this old low, as you can see, we left the fair value gap here. Price trades into there, but this is around that New York midnight open. So we're not trading, but we're still watching price action. So we can just draw this out. This fair value gap. We notice that price traded into the fair value gap, and we want to see price start pushing lower, which it did in London, which we weren't awake during London. We wanted to trade New York. And the reason why we want to trade New York is because there's no news today. There's no high or medium impact news. So London, you could catch an entry in London, but I'd rather just wait for New York. So then we see price break this swing low here. Now from this high to this low, we have this fair value gap. Let's draw that out. Alright. Remember, this is our long-term target. So we're looking for bearishness and we're looking for bearish ideas. So structure being broken, turning into a premium, we sell. Structure being broken, return into a premium, we look for sells. So as you can see, from low to high, or from high to low, turned up. Let's grab a fib. Above the 50%, 62% retracement. We're inside of there. That's a short. That's a short. Aiming for this sell side liquidity. But if you wanted to get refined, you know, our benchmark is our 15-minute chart. So let's see. I'm gonna get rid of this because we weren't trading that. So as you can see, high to low, we have this last up close candle, which is a bearish order block. So we basically refine that H1 level into a 15-minute level. That's important, guys. You guys can go down to time frames because price is fractal. Price is price. So going down to time frames, you can get precision, more precise entries. And you know, who doesn't like precise entries? So 15-minute chart, that's our benchmark. We have this last up close candle in our range from high to low. We tag it here. And then once we tag it here, we can look for that ICT membership, ICT 2022 membership model. And as you can see, even on the 15-minute chart, we got it today. Fair value got, but we want something more close to the model that he shows. So we go down to the 5-minute. Right. I don't see a swing low. Go down to a 3-minute. We have a swing low right here. Gets broken, comes back up into that fair value gap. Let's go to a 1-minute chart. I was working on the 1-minute chart as always. So we got our level at that 15-minute bearish order block. We can see price tapping it, and then we get the breakdown here. Swing low, gets broken. So let me draw that out. You can use this one, and then when this gets broken, you can use that one as a confirmation. But I'm using this one. Swing low gets broken. And then you can be a seller when it trades back up into this range from high to low. Bearish order block, you could be a seller here, but I wasn't a seller there. I waited for price to give me a bigger displacement. As ICT talks about, you want that big displacement. And then if you look back up from this range, high to low, you can see that we have this fair value gap here. And when price trades back up into this fair value gap, I'm a seller. Yeah, if you were trading the dollar index, yeah, you could be a seller here, stop loss above here. But since we don't trade the dollar index, we trade the euro dollar. Alright, so let's go over the euro dollar. So as we always do, we start on that daily chart, right? What do we see? We see this fair value gap on the daily chart. price bit has been in there for a couple days now, but since price is near this fair value gap, we have to have these levels on our chart. And as you can see today, price went lower, made the low today, and then traded higher. So we're going to go straight to that 1 minute chart because I kind of basically explained it on the dollar index. But I'm going to start breaking down that daily range that I want to talk about today. So as I told you guys before, my daily range starts from midnight, New York midnight open. So I don't care about looking back at 5 p.m. No, I'm looking at midnight open, New York time. Then I'm looking at end my trading day around 12 noon, because after that, that's London close, session is over. I'm not looking to trade after that. I'm usually closing my computer. So I want you guys to always have your time first. Time is always first. So you have to map out your time. Mine is from midnight to 12 noon. So then I get my opening price. This is a down candle, so you get the open here. I'm gonna switch this color to like a dark blue. Okay, so that's my opening price, midnight. As I said, we weren't trading London, which is here. We get to New York session around 7 a.m. New York time. And if I told you guys this before, the protractionary stage is important. If you guys forgot, I'll explain it one last time. So looking at your benchmark chart, this is your 15-minute chart. This is how you're mapping out your day. New York starts here. Your opening price is here. If New York starts trading lower, which you want to see, if you're already expecting a bullish bias, why? Because it is this daily fair value gap. This daily bullish fair value gap. You're looking for high pricing. That's why you're a buyer today. Where can you be a buyer? Below the New York opening price. New York midnight opening price. Right? And you want to be a buyer on bullish PD arrays. And what bullish PD array can we see? We see this down move. We go higher, we get a retracement back into this fair value gap here on a 15-minute time frame. Exactly on that opening price, see? So when price trades back below this opening price and into this fair value gap, your chances of buying, your chances of your buy working is very high. And then you can obviously see we have these relative equal highs here, here, and here. That's your buy side liquidity, and yeah, that's your New York session. So you always want to be looking to buy below that New York midnight open price, because the algorithm is gonna be buying below the opening price and then looking to offset it above the opening price, above buy side liquidity. Sorry, I had to take a drink. But yeah, so going down to that 5-minute chart, we're looking for that model. No swing high, get broken. That 1-minute chart. Yeah, kind of like the 3-minute chart, yeah. Swing high here, broken. comes back down into this fair value gap. Here, buyer. That low end of that 15-minute fair value gap is here. Lines up with this bullish order block as well. So you can use that level as well. Let's get rid of that. So yep, you're a buyer here. And then you look to offset above the buy side liquidity. I wanted to just go over something real quick because I did take a loss today. Let me show you. I did take a loss today. I was too impatient. So price was trading lower into this fair value gap here. Let me show you. This fair value gap here. I had it out from this low to this high. And I wanted to get in below that 50%. So I got in like right at the 50%. If you can see that blue marker, I got in like right here. And my stop loss was right here. Obviously you can see price came, stopped me out. The stop out was here at the bottom. But then I got back in here and then here. I got back in again because then I mapped out my range from this low to this high. So my stop loss went below here, never got hit, and as you can see, price started to tank off. So then we offsetted the position above this high, and then from this high to this low, you want to be offsetting above that 50%, as I always say. Above that 50%. Offset, offset. Above this high. And then above this high. And now price, we're in the London closed, that 10 to 12 time period that I tell you guys about. So let me just make that clear. So yeah, your London close would be now from here to here. There might be a setup, but I'm done for today. Just looking for that one setup per week. This could be it, you know. But yeah, that's what I got into today. Just want to explain that buying below that midnight opening price is perfect. Optimal trade entry, that fair value gap, buy it, and then yeah. Hopefully you guys learned something today. Yeah, I just wanted to get you guys out a video. I was supposed to do a video yesterday, but yeah, it didn't come out too well. But I hope you guys enjoyed this one, and yeah, keep trading, guys. Let's go.